Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now, Bitcoin is continuing the short-term rejection as the price is also forming a new pattern in the short term that we need to pay attention to, while Ethereum is also still forming this massive pattern, getting closer towards a major bullish price target, while the price of Chainlink is getting closer towards this short-term break to the downside, while Solana is getting close to a breakout to the upside. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, starting off on the weekly Bitcoin chart, and right now the price of Bitcoin is still in a larger bull market, playing out this bull market signal. So over the last few days, nothing has really changed on this weekly Bitcoin chart, and the same can be said about this weekly Bitcoin chart, looking at the weekly Bitcoin MACD, because right now we're still losing bullish momentum in the short term, but overall looking bullish because we've not yet confirmed a new bearish crossover in the weekly Bitcoin MACD. So as of right now, this is still looking extremely similar to what we saw around 1 year ago. First of all, around October 2023, we saw the bullish crossover, and then we saw a huge bullish move in the price of Bitcoin, just like this year, a bullish crossover in October, and then a huge bullish move over the next few months. And then it was around early to mid-December, we started to lose bullish momentum in this indicator in both 2023 and the same time of the year this year. And what came next in the price of Bitcoin, at least last time, was a lot of choppy sideways price action. So we saw short-term dumps and short-term bounces back to the upside here and there. So chopping around sideways here on the weekly time frame up until basically the end of January, even early February, is when we finally started that next major move in the price of Bitcoin. So be patient. It's most likely going to happen at least over the next few weeks or so. It's most likely going to play out some choppy sideways price action here in the price of Bitcoin before eventually we get ready for that next major move, potentially somewhere in around a month from now. And if we're taking a look at this 4-day Bitcoin chart, the super trend indicator is still sitting in the green, indicating a larger bull market. And if we're taking a look at this weekly Bitcoin chart, of course, we're still seeing this massive bearish divergence, which has already confirmed, as I've been talking about recently here on the channel over the last week or so. And so this is really the first significant warning signal on the weekly Bitcoin chart that we've seen since a long time now, because obviously the last time we confirmed a bearish divergence this large was essentially the end of the previous bull market. But it's also important to understand that this was not the only reason we entered into a bear market in 2022, because of course we had other factors forcing the price in towards that bear market, like for example the Federal Reserve rapidly increasing interest rates right near the end of 2021 and beginning of 2022 was when the market started to catch on to that. But of course, this time around, we do not have the Federal Reserve rapidly increasing interest rates, which would be bearish, as we saw back in 2022, obviously. So of course, this alone does not guarantee that we're going to start a bear market right now, but it is still a warning signal that we still need to pay attention to. So this coincides very well with this weekly Bitcoin charts, basically repeating history, telling us that we're still due to see a slowdown in this bull market. So either some choppy sideways price action or possibly a slight pullback in the coming weeks as the most likely scenario, at least in the somewhat short term. And if we're taking a look at this daily Bitcoin chart, of course, this bearish divergence is technically still active on the daily time frame, as I've been talking about for around 1 to 2 weeks now. Since all the way back here, I've been saying we're most likely going to see either short-term bearish or short-term neutral price action as the most likely outcomes from a bearish divergence. So essentially a slowdown or setback from the bull market. And obviously over the last couple of weeks, this has exactly played out as expected. And I continue to expect this to play out not only due to this bearish divergence on the daily time frame, but once again due to the bearish divergence on the weekly time frame, and also history repeating, showing very similar price action right now, and the MACD looking very similar right now to what we saw around 1 year ago. But if we're taking a look at the 12-hour Bitcoin chart, of course, right now the price of Bitcoin is continuing this short-term rejection, as we've seen over the last few days, from this previous line of support now acting as new resistance, and that line is sitting at around $100,000 is where we rejected from right here. But if we're looking at where the line is currently sitting at, that's sitting closer towards around $101,000 per Bitcoin, and of course that's because it's an ascending line of support, obviously increasing in price. And as for other areas of resistance and support to watch out for on this 12-hour time frame, we do have this area of resistance based on the volume profile indicator sitting at around 97,000 to 98,000. So expect some resistance right there. And then of course, if we break out back above 98,000, expect the next resistance at closer towards around 101,000, and also potentially more resistance at around 102,000. And as for short-term support, we do have a significant level of support at approximately 87,000, but before then we have more support right here in between around 91,500 to 92,500, especially based on these lows right here sitting closer towards 92,500, acting as major support here in the short term. And if we're zooming further into the short term, looking at the 6-hour time frame, right now the price of Bitcoin is potentially forming a bit of an ascending parallel channel right now, which could possibly be a bear flag pattern, because obviously the price of Bitcoin entered into this ascending parallel channel to the downside. We came from the upside and entered towards the downside in the bearish direction, as we could see. And so that could possibly be a flagpole for the bear flag pattern. But in order to actually confirm that as a bear flag pattern, we need to see a confirmed break to the downside below this line of support, and that's sitting at approximately 94.2k. So if we see candle closes, at least on this 6-hour time frame, confirming below that level right there, then that would confirm a potential bearish price target based on a bear flag pattern. And if we're measuring out a price target for this bearish flag pattern right here, taking a look at a flagpole price target right here and taking it over towards the other side of this pattern, that gives us a technical price target at approximately 85.9k, so close to 86,000 as a technical price target to the downside. So from the point of the break to the downside to that price target, that's possibly around an 8 to 9% move towards the downside, which could be likely if we confirm a break below this support, which at least at the time of recording this video has not yet happened. So we still need to wait for confirmation, wait for candle closes below around 94.2k, and especially if we break below this low right here at basically around 94,000, then that would set up this short-term price target at around 86,000. But as always, between this and this price target, we still have other levels of support that we cannot ignore where the price could potentially bounce at. So for example, at around 91 to 92k, give or take, expect support right around there. So even if we have a bearish price target, even if we confirm this break to the downside below 94,000, expect some support right here where the price could possibly bounce at. And of course, if we never confirm this break to the downside below this line of support, below around 94,000, in that case, as of right now, this is still acting as support. And as for resistance for this parallel channel, that's sitting closer towards around 99.8k, so close to $100,000, acting as resistance. And if you want to actually trade these moves in the price of Bitcoin or any other crypto, personally, I take a lot of trades just like this over on BitNex, so I'll make sure to leave a link to BitNex below this video in the description and in the pinned comment. And if you use that link to BitNex, it'll take you to this page right here, which is an exclusive deposit bonus that you can only claim using that link. So if you simply just click that link to make your account and then deposit $100, you get a $20 bonus. Or if you deposit $500, you get a $100 bonus. Or if you deposit just 1,000 USDT and start trading, you get a $200 bonus straight into your BitNex account. But that's only available if you use the link below this video to make your account and start trading on that account. So if you're going to be trading crypto anyway, you might as well check this out. Once again, first link below this video. And also, in case you're wondering, BitNex is a no KYC exchange, which means you can access it from basically any country in the world without needing any KYC. But for whatever reason, if you don't want BitNex, there is also Bybit as another option out there, another exchange that I also trade on. So I'll also make sure to leave a link to Bybit as well down below this video. And if you use that link, you can claim a 500 USDT position airdrop, but that's only available if you use the link below this video to make your Bybit account and deposit on that account. But with that being said, taking a look at Ethereum on the weekly time frame, and right now, technically speaking, on the larger time frames here, zooming out, looking at the bigger picture, Ethereum is still in a larger bull market here, still forming significant higher lows and higher highs on the price chart, as we can see. And so we can only really start talking about a bear market confirming if we at the very least see a break below this line right here, which is sitting at around 2.6k. So if we see weekly candle closes below that line, then that would be bad news on the weekly time frame, pointing towards bearish price structure or a potential bear market. But for all we know, this could just be yet another short-term pullback during a larger bull market, as we've seen many times during this multi-year bull market that really started at around mid-2022 for the price of ETH. And if we're taking a look at this weekly Ethereum chart, right now the price of ETH is also forming a massive inverse head and shoulders pattern, which can be a bullish pattern if it confirms the pattern and confirms the breakout. So in order to actually confirm this massive bullish pattern, we need to see some sort of recovery in Ethereum right here over the next few weeks or so. And this can even take up to around 1 to 2 months potentially in order to complete this pattern, because remember, each one of these candles is one entire week. And so whether it takes just a couple of weeks or 1 to 2 months, either way, if we can sometime over the next couple of months get back up towards this neckline at around 4,000 give or take, and then confirm a weekly candle close above that level right there, above these highs, that would be extremely bullish, because that would confirm this massive bullish pattern, confirming a massive bullish price target for this pattern. And in case you're wondering, that price target is sitting at closer towards around $7,000 per Ethereum. So from the neckline, from the point of the breakout to that price target, that's more than a 70% move towards the upside, which could be coming next if we first actually confirm this pattern, which as of right now, once again, has not actually happened. And so for now, that potential bullish price target and this potential pattern that's right here forming is not confirmed. It is not in play, because it would only confirm if we see that recovery and then a breakout beyond this level right here. That is what would confirm this pattern and confirm this price target. But with that being said, taking a look at this daily time frame, and right now Ethereum is still finding a lot of resistance in this price range as expected, sitting in between around 34.30 to 35.60, acting as strong resistance here in the short term. But if we can finally break out back above 35.60, then in that case we have a lot of resistance right here, sitting in between around 3.9k to 4.1k. So for the bulls out there, 4.1k is definitely the level to break out above in order to expect the next significant bullish move towards the upside in the larger bull market. And in the meantime, once again, we are finding resistance at this area in between around 34.30 to 35.60. And as for support, we do have some short-term support at just above 3.2k, and more support in this price range sitting in between around $3,000 to 3.1k. And if we're zooming into the shorter term, again, looking at the daily time frame right now, we're still technically playing out this bearish divergence as expected. And so ultimately, this is just weighing down the price of Ethereum, as we can see, kind of forcing the price to the downside a little bit and not allowing a lot of bullish momentum, which is what is to be expected after a bearish divergence. And right now, it is technically still active, so we should still be expecting this type of price action continuing moving forward as the most likely outcome, at least in the short term. But remember, if this continues maybe for another week, and then eventually if we invalidate the bearish divergence and start seeing a recovery in maybe a few weeks from now, that could still form a massive inverse head and shoulders pattern here. And so in the immediate short term, of course, we're not really looking really bullish right now. In fact, we're looking neutral to bearish while this bearish divergence is playing out, and while the price is still struggling at resistance. This is neutral to bearish, so neutral at best, bearish at worst in the short term. But in the longer term, zooming out, looking at the bigger picture, we can remain within a much larger bull market when we're simply zooming out. And with that being said, taking a look at Chainlink on the weekly time frame, right now Chainlink is continuing the rejection from almost exactly $31, because right at around $31, we have a lot of resistance right there based on this Fibonacci level at close to $31. And as for support, we have been finding a decent amount of support so far in this price range, which is the previous golden pocket area of resistance, currently acting as support, sitting in between around $21 to $23. But if we confirm a weekly candle close back below $21 in the short to midterm, that would be bad news for Chainlink, because if we confirm a weekly candle close below $21, we will at the very least likely see a breakdown towards around $18, and below that level of support we have more support at around $16, and below that more support at just above $12. So obviously things will likely be bad for at least a number of weeks if we confirm a break below $21, which at least at the time of recording this video has not yet actually happened. And on top of the fact that it would be a bearish signal if we break below $21 based on the golden pocket breaking, it would also be bad news in the short term due to this head and shoulders pattern also currently forming, but still not technically confirmed, because as I've said recently here on the channel, we ultimately need to see a break below $21 with confirmed candle closes below $21 in order to actually confirm this bearish movement here in the short term. And in case you're wondering, the technical price target for that possible head and shoulders pattern right here is sitting close to around $15. So from around $21 to $15, we're talking about potentially around almost a 30% move towards the downside as a likely scenario in the price of Chainlink if we first confirm the break below $21. And on top of the fact that we have this potential head and shoulders pattern getting close to confirming right now, we also have this bearish divergence still playing out, because right now we're still basically rejecting from this line of resistance right here in the RSI. As we can see, we're not really seeing a lot of bullish momentum right now, which means the bearish divergence is still playing out. It is still clearly affecting the price here in the short term. And so overall in the short term, things are looking neutral at best, bearish at worst, but overall more bearish than bullish just in the short term here. But the longer term can remain within a much larger bull market, forming higher lows and higher highs on the larger time frames. Even if we break below $21, that could likely lead to a larger correction potentially over the next few weeks, but maybe next year, for example, in the coming months, we could remain within a much larger bull market. That is still a likely scenario on the much larger time frames when we're zooming out looking at the bigger picture. But like I just said, if we lose $21 for the next few weeks or so, that would likely be bad news. And with that being said, taking a look at Solana on the 8-hour time frame, right now Solana is forming a bit of a symmetrical triangle pattern, also known as a horizontal triangle pattern, and this could possibly be a bearish pennant pattern if we actually confirm a break below this line of support, which is sitting at around $185. So if we confirm a break with an 8-hour candle close, for example, below 185, that would set up a bearish price target based on this bearish pennant pattern. And so based on this being a bearish pennant pattern, if we confirm the break below support, that would set up a flagpole price target to the downside, which if we're measuring the technical price target like this, for example, that would be sitting at around 157, falling right into this area of support in between 156 to 161, which would be a likely scenario if we break below 185 and especially below 180. But looking at the complete technical price target, that would be sitting closer towards around 149 as a technical price target if we break below 185. But looking at the bullish price target, if we break out above this line of resistance right here, which is sitting at around 197, close to 198 approximately, in that case, looking at the bullish technical price target, if we first confirm the breakout here above that line of resistance, that will set up a bullish price target at close to $220. So from that breakout to that price target, that's around a 10 to 11% move towards the upside as a likely scenario. But remember, we first need to confirm the breakout at least above this line of resistance. And of course, even if we break out above that line of resistance and have a bullish price target, as always, we cannot ignore other points of resistance. We can still reject from other points of resistance, like for example, this area acting as strong resistance in between $200 to $205. And so honestly, I would not be flipping overly bullish again on the price of Solana until the price at the very least breaks out above $205, because in the short term, 200 to 205 is proving to be strong resistance here in the short term. And so I would only really start to expect to move up towards around 220 to 223, acting as the next resistance if we first confirm a breakout at least above $205 with confirmation. So candle closes above that level. And as for support to the downside, if we break below 185, remember we still have support at around 180 and a lot of support in this price range in between around 156 to 161. But this is a potential trading opportunity that we could take here. So for example, if we confirm the breakout ideally above $205, that could possibly be a signal to open a small long position, trading out a bullish move here. Or for example, if we never confirm this breakout here and instead we actually reject and break below 185 and especially below 180, that could be a potential signal here in the short term to open a short position to trade a move towards the downside. And so as crypto traders, we can make money no matter what direction the price goes using a long position or a short position, for example. All we need to see is simply a confirmed break of one of those levels as the signal to enter into that trade. And once again, if you want to trade any of these moves in the price of any crypto, check out those links below this video to claim those extra bonuses. And if you want to actually know how to trade crypto, no matter if the price is bullish, bearish, or chopping around sideways, you can profit from all of that price action by watching these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.